Welcome to this video. In this video, I'm going to be making a stock analysis of Opendoor Technologies. If you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't a financial advice, this is purely for entertainment and educational purposes. Now, you probably have heard of Opendoor Technologies these days because of the meme stock craze that is happening again, with Coles and Opendoor Technologies being the forefront of that. Now, let me just make this chart a bit bigger, with each candle being a day instead of an hour. Now, as you can see, it's quite an ugly graph. As you can see, the small company, which was first publicly traded back in 2020, as you can see, it quickly jumped all the way up here, as you can see in 21, because they have a quite nice product. It's a bit like Zillow, but just the way that they operate, they have an amazing website, and I really urge you to check it out just to get a sense of how they operate. Now, as you can see, then it just kept falling and falling and falling, which means everybody who bought above this red line here is sitting at a loss, quite a huge loss. Chances are it's going to fall back down again, and chances are, let me just make this normal again, that the reason it's falling so harshly today again isn't because of the meme praise. That is because some of these people who made a lost, or the people who bought down here thinking, great, I can make a huge profit now, or people are thinking, great, I can take less of a hit. They don't believe in the stock anymore. Now, I do believe in it, I just don't believe in it right now. As you can see, this pink line here, that is the next proper technical we have for this stock. So it should fall a dollar or more. So as you can see, it's just about an $1.50 here, right here. Now, as you can see in the RSI, that is not being performing that great. As you can see, most of the time we are down here in the bottom RSI. Now, what is RSI? That is the relative strength index. So if something that's between 50 and 30, it's moving downwards. If it's between 50 and 70, it's moving upwards. And above 70, as you can see right here, it's moving upwards quite rapidly. And down here, it's moving downwards quite rapidly. Now, of course, remember, because this is the relative strength index, that is only relative to the price that came before that. So just because it can be, as you can see, overbought right here, it still can rise quite sharply. So of course, also always be careful when this happens. But as you can see for the day right now, our RSI is going downwards, and I do think we are going to see it sit down here about the 40s or 35. Now the beta on this stock is quite high, 2.16, which means it is more than double as volatile as the index it lies in. And as you can see, the price earnings this isn't existing because we don't have any, and their EPS is quite small. And just overall, the market cap of this company isn't that big, only 1.73 billion, which of course is a lot, but then again, it has been grown rapidly, and it is realistically much lower than this. Now earnings, they are performing nicely, which is a reason why I like the company. They are quite realistic, which I love to see, and that they're making so much money, which actually surprised me when I first took a look at the stock. But also then again, I do really like their product, but overall I just can't wait for them to gain more money more consistently, because this is just way too much in each direction, which I don't like to see. But and then to make actual positive net income, I do think it's going to be great to see. And as you can see, the financials, it is purely residential real estate, and it's only in the United States. And it wouldn't surprise me if they also try to expand to Canada and Mexico, but they haven't said any of that at all recently. Now the seasonals on the stock, as you can see, is quite crazy. We have, as you can see down here, huge losses and some huge gains, which is absolutely crazy. So I would be quite careful owning this stock if I were you. Now, as I said, I don't own any of this myself because I am waiting for them to get a bit more classy or a bit more normal. Now the technicals on this we kind of rely on, as they are just absolutely crazy because of this huge increase. So I would be very careful. I can't really say that I've be very careful in a stock like this, because it is quite an easy way to lose a lot of money. Of course, you can also make great money if you bought down here and you're up here, even just sitting currently where you are. But then again, it is very easy to lose a lot of money in stocks like this. Now the analyst rating lists are quite alright. Even though we have one strong sell, one sell, we have quite a lot of hold and one strong buy. But overall, these are quite poor, as you can see, but that is also because it just jumped so much. If it were down here as it was previously in June, it would be quite decent. But then again, analysts haven't had a chance to reiterate their analyses, and I doubt that they will, that because of this meme stock craze, unless something comes out recently, which we haven't seen. But I do think it's going to fall back down, as I said earlier. So I wouldn't take these analyses too serious right now, because we are gonna have to wait and see how the stock moves, because right now we can't really use these, because if people are trading this stock illogically, well, it really isn't gonna matter. Now the EPS, as you can see, is they're estimated to still lose money until 2028, and annual earning, as you can see here, they're guiding a bit more normally, as you can see, increasing year over year, rather than, as you can see up here, where it bounces up and down all the time. Well, that was my analysis on Opendoor Technologies. If you like this video, please don't forget to leave a like and subscribe. And of course, if you want to see more videos like this, please leave the companies you want me to analyze in the comment section below.